In today's video, I'm going to explain a little bit more about what was shared on the Mad Money Off the Chart segment, because you can't really get everything in a few minute segment. So let me explain a little bit more about what I look at. So one of the things that I want to start with is the 513 EMA combo. Okay, this is very helpful in some stocks, not all stocks, but it's very helpful as far as helping you stay on the right side of the market. So for example, when the 5 crosses back below the 13, you have to be prepared for a move to the downside. Sometimes it's minor, sometimes it's big. When we shift back to the buy side, which we did over here, okay, I think right around April 6th, you can see that we crossed back to the upside and we've never crossed back down. That's one positive in this market in NASDAQ. Now the other thing that we're watching is, well, what else tells you that it's an uptrend? A pattern of higher highs and higher lows, okay? And that's what we've been seeing. Now we haven't broken the prior swing low. So last time we were watching to see if this swing low was going to be broken, and it wasn't. We're still looking at a pattern of higher highs and higher lows. Now we're definitely closer to resistance at this point. So, keep that in mind. Also, one of the things that I will run for possible resistance, I will compare some of these swings in the same direction because they tend to be similar to the others. So, for example, that low to high projected from the recent low, this low to high projected from the recent low, that's all in that same general area as far as, resistance. We have, well, let's just call that 2 symmetry projections of prior swings and the 1272 extension. So that's the resistance that we're currently up against right here. But what else did we talk about? We talked about the timing of declines pretty much within the uptrend. And they were 1 to 4 trading days. Actually, until recently, it was just 1 to 3 trading days down. And I said that plus or minus a day is okay as far as the cycles. Well, this was 4 days down, which was plus a day. So, we were still within this same general pattern. If we started to see a decline from any new high that lasted something like 5, 6, 7, or 8 days down, that's an indication that we may start to get a deeper downside correction because you're breaking the pattern that has been intact since this low. Okay, so I count the time of the corrections, and sometimes that is helpful, sometimes it isn't, but it is often enough. And then also I look at the price of these prior corrections. And typically you want to see a pullback that's not going to be more than the prior declines within the uptrend. Okay, and that also held up because we held above, these symmetry projections of all of these prior swings. So all of those things, told us basically to look for a possible resumption of the rally early in the week. And it did hold up. It held support, it triggered entries, and there was a rally of, well, at least on NASDAQ cash, 689.66. Okay, if we had started to see the other things occur, a decline for maybe 5, 6, 7 days, whatever, and a decline that was more than these prior declines within the uptrend, and we also took out a prior swing low, that would tell me that the market's in more trouble at that point. Okay, but we didn't. So this one is still a very bullish pattern, though closer to extensions where moves tend to terminate. Also, I do have a couple of timing cycles that say, hey, we might get a little bit of a pullback, but if the same bullish pattern is going to remain intact, then this pullback shouldn't be more than like 4 or 5 trading days, and it shouldn't take out the prior swing low, and it shouldn't go lower than these prior declines. Okay, so let's also take a look at the 513. I wanted to show you an example on Apple because this doesn't work on all the charts, but if you check the chart and it has worked in the past, then watch it for the future. So here in Apple, we had the crossover here to the downside, and you can see how much of a correction that we got. You're vulnerable to that when it happens. It could have just had the crossover and maybe just given you a little bit of a pullback and resumed the rally too. But, this, again, you want to try and stay on the side of this. And this was bearish at that time until it crossed back to the upside over here. And you can see how, we've been straight up ever since. and we haven't had a crossover back to the downside. A lot of times, I'll have people use that kind of as a stop if you're if you've been in for a decent move here. All right, so anyway, it's worth looking at. It's not going to be 100%, but look at all the time though that it was helpful, because when you have this on the side of the bulls, you do look at buying the pullbacks. But that will change if it crosses over to the downside. All right, now let's get into the S&P cash weekly. Okay, now before this happened, I did have this obviously in the trading room that I wanted to watch for possible resistance from this prior major rally swing. That was 1046.94. I projected that from this low. That gave me resistance at 32.38. It was not a perfect hit. 32.33 was the actual high. Okay, but we knew this was important resistance, and we did fail. Okay, so one of the reasons why I was being cautious was because, hey, you have to clear this if we're going to head towards those next targets. So if you don't clear it, I still have to consider us vulnerable to the downside, right? But if we can push through it, then that paves the way for the much higher target here. And then there would also be a minor target off of this swing, and that would come in 33.05 and then 33.98. Okay, but so far we have not been able to take that out. That's why I have more concern about the S&P. Now also on the S&P, now you can see pretty much the same thing as far as we had the crossover back to the upside over here after we had actually time and price at that low on March 23rd. And we've had, a nice, healthy rally since then. But this one looks a little bit different. We have a decline that was definitely larger than these prior declines. That's a warning, okay? Also, you did have the 513 on the side of the bulls pretty much all the way up until here a few days ago. So it was helpful all the way up here, but here you cross to the downside for a few days. And again, that's a warning, okay? It's, some people might use that as a stop, and that's fine. But one of the things that I was trying to get across is that if we did cross back to the upside, and we already have price above the 200 and above the 50, that then we can feel more comfortable about looking for the upside targets. Now, upside targets will come off of this swing, that extension there, the 1272 and the 1618, and there will also be targets off of this swing, and that comes in 3305 and again 3398. So again, that's something you want to remain aware of, and I will be setting up the pullbacks until they don't work anymore. I mean, I update this stuff every single day. Right now, you're still in a buy mode, but let me show you something in the S&P futures that's just slightly different. Okay, so in S&P futures, we had the same thing here where we did cross to the downside for a couple of days, and that was worrisome. Yet we didn't take out this prior swing low, and we did have another area that was an important hurdle in this market. It came from taking 100% of the prior rally from the new low, and then running the extension, or the retracements, and we had a 786 retracement that overlapped the 100% projection. That resistance was at 3157 to 3162. Okay, and initially we did see a decline of, it looks like, was it 153? Let me just double check this low here. Okay, so from that high to this low, no, that was more like a decline of 172 S&P points. Okay, but now you have to look at it this way. Well, we did cross back to the upside with the 513, but I really need to push through this area to feel confident that we can head towards the next upside targets, which are going to be, looks like 3203.16, 3263, and then of course, from this larger swing, 3301 and 3403. Anyway, so the fact that we've now crossed back to the upside gives us more hope, because now we have all the moving averages back on the side of the bulls. And like I said, in the short-term stuff, we're going to be looking at, we will look at support, but like our immediate decision, Monday is going to be where this symmetry comes in, because yes, we've seen a beautiful rally from that last low, But if we start to decline, because I use this on everything and every time frame, but if we start to decline for more than these prior declines within the uptrend, you have to be prepared for at least a deeper downside correction. But if we hold above here, then we can look for another extension to the upside, which would take us through this old resistance and then hopefully take us to the next upside targets. Hope that makes sense. If you have any questions, feel free to ask.